And the options market is booming with the most action it has seen in at least 50 years. That is according to an analysis done by the Wall Street Journal. Gunjan Banerji, the author of that report, joins us here on set. She's also a CNBC contributor. Gunjan, great to have you with us. And it's amazing how much it's risen, but also what it's been driven by, and that is short-dated options.
That's right. There's been a mania in these shorter-dated options known as zero DTE, and that's really helped turbocharge this mania that really began in 2020 during the pandemic when people were stuck at home. They were opening their Robinhood apps and playing the options market. And since then, the activity has just soared and soared and soared. Shorter dated options recently made up around half of all activity. And, this is a new product. This is something that wasn't even on the scenes, last year, 2 years ago. So it's pretty remarkable when you look under the hood.
Is there a sense of what percentage of those zero-dated options are retail-driven or institutional?
Many of those zero-dated options are retail-driven. They are part of the mix, especially in the market for S&P 500 index options. I've seen mixed estimates of that, but rookie investors, they loom large in this market. They actually make up a greater share of the options market than they do the stock market. Of course, that raises concerns of, are these individual investors taking too much risk out there in markets?
Some of the most popular trades that you highlight in your report are sort of the usual suspects. AI, Tesla is always the most popular individual option. What other things have risen to the top?
It's really been a way for people to magnify their bets on AI. I was surprised to see Tesla, make the top of the list once again, especially because of how popular NVIDIA has been as a trade. It also seems like these one-day options, they've become a way for people to play the economic uncertainty that we've seen this year. 4 out of the top 5 trading days for one-day S&P 500 options were around days like CPI, the labor market data, GDP data. So watch out for that in trading tomorrow and Wednesday when we see CPI, PPI, because that's been a way for people to play these huge moves in stocks and bonds through things like TLT.
You mentioned that these options didn't exist a year ago. What is on the horizon? Is there a slice in the options world that is even shorter dated than what we have now?
If there is, I think exchanges and brokerages are going to try to, create it out of thin air because this is a cash cow for ETF providers, for retail brokerages. Let's not forget, options make up, they're much more lucrative for these retail brokerages than stocks are because of payment for order flow. That's one of the biggest sources of revenue. And I think people are going to try to, capture this golden goose while it's still around.